Hey there, good afternoon. This is Mitch Goldberg. You're watching the live stream. Welcome to the pod. Welcome to the pod. It's not so cool when I say that, or doesn't it? Makes me feel cool. The pod. Yeah, I got a podcast. Whoopee. I got a live stream. I got a couple of things going on, but you know what? Most important thing is you're watching, and I really appreciate that. That means a lot to me. Thank you for joining me. This is called Be the Boss of Your Money. It's about you taking control of your money. A lot of it is strategy, teaching you things that you would not have otherwise known about, teaching you the personal finance things that you may not have learned when you were younger that you wish you did, but you need to know them now. Sometimes it's reinforcing what you may have forgotten, reinforcing old lessons. And sometimes it's about being your accountability coach. Like, why haven't you considered this? Why haven't you considered that? A Roth IRA conversion, for example, maybe getting rid of your Netflix if you're not using it, like things like that. But we also talk about estate planning. Why haven't you updated your estate plan? Why haven't you checked your beneficiary designations for your IRA? These are the things you need to be doing. Personal finance, being better with your money, has nothing to do with picking the hot stock of the day. I was asked by a friend today, what makes me different than other financial advisors? Because we're all over the place, financial advisors. We're like a dime a dozen. And it'll take a pretty good shakeout in the market to really, eliminate the herd, cull the herd, so to speak. So what makes me different? I don't want to speak to others. I can only speak to what makes me different. But I don't just come out and say, buy this and buy that, put your money here, put your money there. I really first take a pretty in-depth view of who you are, of what your definition of retirement is. Does anybody ever ask you that? Like, what's your definition of retirement? You'd be surprised how everyone has a different definition. There's no one size fits all. There's no cookie cutter definition. That's why I don't have cookie cutter advice. I just don't give that. So what I do is I look at stocks, bonds, mutual funds, exchange traded funds. I look at all these like tools, insurance products. I look at these as just tools. You tell me about your needs, your vision of retirement. We measure how long it's going to take to get there. We work backwards to get to now to make sure we take all the steps. First, we have to do this. Before that, we have to do this. Before that, then we test it going forward and back a couple of times to see if we need to make any refinements. And then we put things in order. We execute the plan. And I pick investments, insurance products, that sort of thing, based on what you need. Again, these are just tools. So you tell me the house you want to build, when you want it done, and I come up with the tools and materials and the labor to get the project done. That's what I do. Does that make me different? Maybe just by doing what I'm supposed to be doing is what makes me different. But I definitely don't make this more complicated than it needs to be. While you're watching, if you have any words of wisdom, questions, let me know in the comments. I love hearing from you. It's the best part of what I do. And if you don't mind, give us a thumbs up, a heart, a wow, whatever reaction is available to you, depending on which social media platform you're watching from. All right. We go on all these platforms. I'm on Instagram, YouTube, LinkedIn, Facebook, Twitter. We've got someone out there now. Who could it be? And it is Mark. Let's put you up there, man. Hi, Mark. How are you? Nice to see you. I have a feeling we're going to be talking in the very near term. I'm looking forward to that. Let's roll a quick intro. And then, I know, like at this point, is it really an introduction? Yeah, it's kind of an introduction. We'll go over today's market wrap. Pretty boring day. Lousy close. We're up 450 points in the Dow. We closed up only 50. And that does not bode well. It tells us we're still in a short-term downtrend in the market, in my opinion, because the rallies just don't hold. Here we go. We had our rally and things weren't as bad as expected. The inflation has come down. Inflation figures came out today. That was the big the big thing of the day, and we appreciate that. Thank you, absolutely. So inflation numbers came out, basically exactly in line with expectations, but down from last year a lot. Last year we were about 9% inflation. Now we're about 3.2. Are we going to get to prices of 2019? No, don't count on that. Prices could stay where they are now for the next month, and you'll have inflation at zero. Doesn't mean prices went down. When I say inflation is flat, it just means they went up and they stayed up as far as prices go. But it is reassuring. It's somewhat soothing. The odds of, according to the Fed Watch from the Atlanta Fed, which is a tool we use that gauges the feeling or the odds of a rate hike, according to money managers, is like 6 or 7% for September, a little higher for November. And then we have one more rate hike in December. So right now, it looks like if we do get a rate hike, it would probably be November or December meetings. We don't really know what the news is going to be like then. So trying to figure out what the Fed's going to do in 3 or 4 months is just a fool's errand, in my opinion. But for now, it's steady as she goes. But the market's always asking, what have you done for me lately? So funny. So the market's asking, what have you done for me lately? And we have our inflation figures out. We have 90% of S&P 500 companies that reported earnings. By the way, you can't invest directly into an index, but you could invest in a security that tracks or mimics an index. The last big one is Disney. Today, the stock was up 4 or 5%. Not enough to really pull the market up. It's not a strong Dow component because the stock price is under 100. How rude is that? I'm sorry. I'm just exhausted. It's been a long week, but I can't believe it's Thursday already. Disney is not a part of the NASDAQ. It's a tiny part of the S&P 500. So that has like no bearing whatsoever on the markets. So we're just marking time. And without an upward catalyst, I think the natural draw is to have a little bit more selling than buying. And that's where we are now. We are in the dog days of summer. Tomorrow is a Friday, basically the middle of August. There is nothing going on tomorrow. The parking lot is going to be like a ghost town. You're going to see tumbleweeds up and down the Melville corridor where I am. That's the main business corridor of Long Island. And it's just really, the dog days of August, not a lot going on. And I really don't have any amazing news to tell you. It's just the market is marking time. It wants to figure out what it wants to do for the rest of the year. And I don't expect any fireworks until we get another couple of inflation numbers, another few employment reports. In 3 months, we start earnings season all over. Okay, so we'll see this in October, first week of October. So not a whole hell of a lot to hang our hat on. We've had the enthusiasm from artificial intelligence. It kind of came and went. It's starting to wear off, as we predicted right here on Be the Boss of Your Money. There's no particular hot sector. Following news on Advanced Micro Devices, we just got a hot pick by Morgan Stanley as a artificial intelligence stock. It's just so odd that it used to be if you wanted a good computer, you bought a computer with an Intel chip. And if you wanted the cheap computer, it came with an Advanced Micro Device chip. Now Advanced Micro Device is the quality one. It's just so odd to me because in my day, it's still my day, all right? But back in the day, AMD was like the cheap, no name, like the no frills chip. Now it's the hottest thing going. That is really about it. We've been talking about Social Security, taxes on your Social Security. I'll just say this, that if you don't get your taxes under control in retirement, you don't lower your adjusted gross income in retirement, not only would you be paying more taxes, but you'd be paying higher premiums for Medicare and potentially higher tax rate for Social Security. So these are the kinds of things that we need to look at, and these are the kinds of things that we plan way in advance And that's why you work with a financial advisor who thinks of these things and who looks for stones to turn over, for opportunities to come up, to uncover. That's why you work with me. Check me out, clientfirststrategy.com. I'd love to hear from you. And I'm going to sign off now because I have to make a very important call to a very important person. See you Monday. Have a nice weekend. Bye.